Hi, thanks for joining us here at Framework FX, and today we're going to be talking about a London breakout strategy. Okay, now there are many different variations of the London breakout strategy. I'm going to take you through a particular one that I learned a while ago, and I can't actually remember where I learnt it from. So if anyone in the comments knows of anyone, I'd love to give credit. If there's a video on YouTube or something with this particular strategy, let me know in the comments and I'll certainly give credit for it. Okay, so before we get started, if you're not subscribed, that would be really great if you could do that. Like the video, ring the notification bell. We're back to posting regular new content, very much like we're doing today, so make sure that you don't miss that. Okay, we're gonna go through, have a look at the strategy. I'll explain it, how it works, how you trade it, and then we'll move on and take a look how it performed over the last 12 months. Stick around. Okay guys, so here we are. Let me describe this London breakout strategy. As I mentioned before, there are several different variations of it, so if you've been taught or you've read about another way, that's perfectly fine, perfectly acceptable. I'm just going to teach you this way that I know. Personally, I don't trade mechanical strategies, that's what this is, but I'm certainly happy to backtest them and take a look and see how they perform. So we start off. Here we are at Trading View. We're on a 15-minute time frame, and for this example, I'm going to use, and for the backtest, in fact, I'm going to use the pound dollar as I normally do. I've also added, as you can see on the chart, an indicator which is sessions, and that just explains or it just highlights where the different sessions of the day start and end. Okay, so this blue session is what we would call the Asian session. Okay, and that's what we're really going to focus on with this London breakout strategy as we come in to the London Open. So the first thing we do is we watch, or we come to our screens, and just before the London Open, in our time it's 8 AM, we take a look at this and we mark out the highs and the lows of the Asian session. Okay, so it's really simple. You just put a line there and a line here. Okay, so now we have the highs and the lows of the Asian session. This is what it looks like. So what we want to do first is measure from top to bottom how wide the session was, and here it's about 35 points. Okay, so we find the mid-level, looking about 17.5 points, somewhere roughly around here. Now once you've found that at the opening, we're going to set a pending order. Okay, now I'll quickly go through the different pending orders because it is really important you get the right one here. Okay, so for pending orders you have two main pending orders. You have a buy limit, or sorry, you have a limit order, which could be a buy limit or a sell limit, and you have a stop order. Okay, and the difference is this. So let's say this is our order, and let's say price is down here. Okay, so price is below, you've set your order there. If it's a limit order, what you're looking at price to do is to come up, touch it, and you take a position in the opposite way to where price has come from. So it comes up from below, you touch your order, and you take, in this case, a sell trade, and you're hoping for price to bounce off it and go down. Okay, and you'd have a stop somewhere above it up here. Okay, that is a limit order. If you had what we call a stop order, and that's what we're going to be using here, so it's important to know that, price will come up, and what you're looking to do is follow the direction that price is going. So you'd come up here, and as it touches this price here, you would take a buy order, and you would hope that it would carry on up there, and you would have a stop. When it touched that line, you'd have a stop somewhere down here below it. So you hope it runs through it and carries on going. Okay, they're the different types. I'll leave a link in the description to orders in case you're new to trading and you want to learn a little bit more. So for this, we're going to set a stop order. Okay, so we're hoping that price is going to come back and drive straight through it to the upside or the downside, whichever trade we take. So in this case, as the price opens, the London session opens, price is below the midpoint. Okay, so we're looking at setting a buy stop order at the midpoint, so right here. Okay, our stop goes at the low, and then we aim for a 1 to 1.3 risk reward, which is around there. So that's what it looks like. Now you've set your order, okay, as the London session opens. So what you're looking for now is price to come up here, tag us in, and just carry on going. Carry on going, run straight through our take profit and make us some money, okay? So there's the open. Can't tell, we might just be tagged in there. Don't think we're quite, now we're definitely in. Still in, it's come down a little bit, drives up, and there we go. So that's a win. Okay, that's what a win would look like. You set it, price is below the midpoint as the London opens, you set your buy stop order, it comes through, tags you in, and carries on up to hit your take profit. Okay, let's run through. I haven't actually checked if there's another good example the next day. So just to clarify, this green is the London session, so the London session ends there. Carry on, we're looking, and now we're back into the Asian session, that's why it's gone blue. I'll just get rid of these, move my lines across. So now we're looking for that to we're looking for the Asian session to end, so that's our last. So now, just as the London session's about to open, we mark our high. Just go through it again. We mark our low of the session, somewhere around there. We measure it from the high to the low. So that's around about 28, 29. Let's just call it 30 for simplicity of this example. So put it in at 15-ish. And now again, just as price is open, you can see here, price is below the midpoint. So again, we're looking to set a buy stop order. Your stop loss goes at the low, and you target 1 to 1.3 risk reward. So let's take a look at the London session opens, not quite in there, pulls away a little bit. Now this is a good example actually, I'm glad this has come. So I would leave that pending order open all the way till the start of the next Asian session, okay? So we'll leave this is still open, we're at 2 PM, still open, and then we're tagged in here at around about 3:30 PM, and then we're taken straight out for a loss. Okay, so that's what a loss looks like, and that's the strategy, guys. That's as simple as it is. It's mechanical, which means that there's a predefined set of rules that you follow. It takes all the emotion, it takes any need for discipline out of it. As long as you follow them specific rules, then that's the strategy. So if I take you across, let's go and have a look now and see what the results say about this. If you have any questions, because I have rushed through that a little bit, but it is a very simple strategy, so it doesn't take much to learn. But if you have any questions, please feel free to put them in the comment section, and I will try and respond to them as soon as possible. But yeah, let's go take a look at the results. Just before we get to the results, guys, over at Framework FX, we run a copy trading service where we take trades and they open up in your account. It may be of no interest to you, but it may be of interest to you, so it would mean a lot to us if you could jump across there and take a look at that. Cheers. Okay, guys, so the results are in, and this is what they look like. Okay, so the first thing, as I always do, is I will bring you over to the overall profit, which is right here, and that was 81.9%. Okay, so they're pretty fantastic returns, especially for a mechanical strategy. Okay, so just to clarify, I tested this from July 2020 through to June 2021, so the last 12 months of trading, and that was our return. Okay, if you look here, the win rate was 61.19%. So yeah, I'd be very happy with that. As I always sort of mention to you guys, if you're looking for strategies and people are telling you they've got 90, 95%, 100% win rate strategies, then they're lying to you. Okay, 60%, 61%, that is a reasonable win rate, and I'd be really pleased with that with any strategy I was using. Okay, especially seeing as though we've got a positive risk to reward as well on top of that. So if we pull up so we can look up at things in more detail, we'll take our months first. Okay, so as you can see here, we had a pretty even flow across the months. we only had 2 losing months. Okay, that was March 2021 and December 2020. Now, I can't offer you a reason for that, to be honest with you. Could be due to many different factors. I'm not entirely sure myself. But yeah, two losing months in a year, and as you can see, compared to the winning months, they were pretty negligible. Okay, so we'd be happy with that. October was our largest winning month, June quite close behind. I found that interesting, and I'll tell you for why. I remember trading October 2020, and I found it a very difficult month to trade. So it's interesting to see that mechanical strategy has done so well. It could be because the markets were quite sideways that month, and that works well for the strategy. I just can't be sure, but I was definitely interested to see that that was the strongest month. So we took 251 trades, we had 123 winners, 78 losses, and 50 break-even trades. Now let me explain what I mean here when I say break-even. So I briefly mentioned it in the example, but I would set a pending order and I would leave it open all the way until the next Asian session opened. If the next Asian session opened, I would close the pending order, and I noted it in my results as a break-even trade, because we didn't trade, so I put it as break-even, put it in as 0%, to keep it accurate, really. So that's what I mean when I say break-even. And they were important to include. I'll just also highlight, as you can see, December we only took 14 trades, which was significantly lower than the other months. This is because I stopped trading on I believe it was the 20th of December. I like to try and keep these backtests as close to reality as possible, and I know for a fact that I, and probably a lot of other people who trade, wouldn't be trading over Christmas, so I left it there. And finished where I would have finished in a normal year's trading, and as you can see, that was our biggest losing month, and maybe that played into it. Maybe we just didn't give the strategy enough time to play out that edge by missing those sort of 6, 7, 8 trades extra that the other months had. That could really be a factor. So if we send that back now and we take a look at this big wedge of data, again, the second thing you always know I like to highlight to everyone is the max drawdown. And on this strategy, we had a minus 7.44% drawdown. Now again, that's superb. I'd be really pleased with that. Generally, that is good enough for me to trade. And it also leaves a little bit of room to increase your risk, okay? Like I often say, I'm pretty pleased with anything below sort of a minus 15% drawdown. I'm quite happy. I can psychologically deal with that. So maybe I could look at increasing that risk to 2%, and that profit obviously would have grown significantly more as well with that. But yeah, overall, that as a max drawdown, I would be more than happy with. What else have we got in here? Long trades and short trades took more or less the same, so there was no real bias in that. And that's about it really there. There's nothing else particularly important to look at there. So if we send that back, if we pull up, let's pull up days of the week. So days of the week, again, very interesting, a little bit different to what we've seen with other strategies. Profits more or less well diversified across every day of the week, which is good. That means that we can take trades any day of the week. We're not looking at maybe dropping a day out because it doesn't perform as well. Monday, interestingly, is the lowest return we had, which is contrary to what we often see. We often see Monday, Tuesday being our strongest days, as the markets sort of reopen with their fresh moves. And maybe that's a factor here. As I mentioned earlier, maybe a sideways market is what really this strategy thrives on. Tuesday very strong, Thursday very strong. But no, I'd be really pleased. I am really pleased seeing that the way that they're quite evenly placed across the days of the week. So if we send that back now, I'll pull up time of the day. There's nothing particularly out of order here. Obviously, you can see here that 8 AM and 9 AM is when we get tagged into the most trades. It is a London breakout strategy. It is supposed to be traded around the opening of the London session, so it's no surprise at all that we see our biggest profits coming from them, and that is 61% of the 81% profit comes from those first 2 hours. Okay, so again, you know, this could be a good strategy for someone who is busy, who doesn't want to sit at the laptop all day. If they're on at 8 AM on a morning, they can see where the highs and lows are, they can see where to set their pending order, they can set it and they can walk away. Okay, it's that simple for them people, and they can get on with maybe their full-time job, maybe looking after kids, whatever they're doing with their day. So this strategy would work great for them. As you can see, there are still a few other profitable hours in the day. Interesting to see there, sort of around 2 o'clock, around when the US is looking at opening, is a losing hour. Again, not a big losing hour, not really anything to worry about. Just interesting to note. So if we send that back, let's bring up the visuals here. So yeah, really pleased with that. As you can see, a strong growth there. That is exactly the kind of profit we want to be looking for. A slow incline. Okay, there are the odd pullbacks there, but that's every strategy, guys. Okay, if you're looking for a dead straight line or a dead straight equity curve, you're not going to find it, and you're going to struggle in trading. This is what we want to see. It's slowly trundling up, and I'm really pleased with that. Really pleased with that indeed. If we look at the top, the months, just telling us again what we already knew. Sort of December, January, February, March. It is interesting looking at the visuals there, seeing that they are sort of them weak months came sort of around the same time, really. Okay, yeah, I'm struggling to offer up an explanation for that. It could just be how it is. Like I said, it's a mechanical strategy, so you are relying on the market telling you whether you're making money or not. You know, that is what it is. So improvements. Again, it's hard to sort of start picking out improvements when you've got numbers that look this good. I would say the 1 to 1.3 risk reward ratio, again, could probably be increased. As I often mention, when trades were winning, you were sort of getting, you know, 1 to 1.5, maybe even 1 to 2. You could look at maybe increasing that. But again, it's not something that you should have to do, because it is, when you've got a win rate at 60% and a positive risk reward, you're making good money, you're making good profits, excuse me, and that's all we're looking for. Okay, so yeah, I'm just trying to think, is there any more improvements? I don't think so. It's a very simple strategy, guys. Okay, and it's supposed to be that way. It's supposed to be easy for people to execute. It's not supposed to take up much of your day, and that's what we're seeing with it. So I wouldn't mess with it very much. If I were you, I'd go away, I'd backtest it, I'd maybe look at it in other years, maybe look at other pairs, see how it gets on, and yeah, see if you can refine it yourself in any way. But no, overall, I think this has worked out really well. I'd be really happy with them numbers. I think the strategy would work really well for people with not very much time, with limited trading experience. It gives you the rules that you need. It takes out all of the emotion and all of the discipline that is needed in general trading. And yeah, I'd definitely say for beginners especially, this could be a really strong strategy. Okay, so thanks for joining us today, guys. As I said earlier, please do like and subscribe if you've got anything from this video. We are back to posting regularly, and you're going to see a lot more content like this. Also, as I mentioned earlier in the video, please do jump across to frameworkfx.com, take a look at that, see if there's anything in there that interests you. And apart from that, all I've got to say is thanks for joining us today, and happy trading.